Welcome to the Explainer. Today, we're putting on our detective hats. Bitcoin hits this spectacular, brand new all-time high. And then, just days later, it absolutely tanks. So what happened? We're going to follow the clues and try to solve the mystery behind this massive price crash. And to really get in the right headspace for this, let's start with this quote from Samson Mow. It just perfectly captures that kind of wild, do-it-yourself spirit of the crypto market that we're about to dive into. Okay, so here's how we're going to tackle this. First, we'll look at the price swing itself, the scene of the crime. Then we'll dig into those whispers of market manipulation, check out the external economic pressures, and try to make sense of all the conflicting data. And finally, we'll zoom out and look at the much bigger picture. All right, first up, let's set the scene. We are talking about a price move that was so fast, it gave the entire market whiplash, flipping the mood from total euphoria straight into a nosedive of fear. I mean, it feels like just a second ago, right? Bitcoin was on top of the world, just smashing through its old records and hitting this incredible new all-time high of over $124,000. The mood was absolutely electric. And then, boom, the floor just completely fell out. The price plunged, wiping out nearly 10 grand to land around 115,000. Now look, in crypto, volatility is the name of the game, but the sheer speed of this drop really caught everyone by surprise. And you can really see that whiplash right here. I mean, one minute you're popping champagne for record highs. The next, people are drawing these really scary comparisons to that infamous 2021 market peak, right before things got ugly. It was a total emotional roller coaster for anyone watching. Which, of course, brings us to the central question of our little investigation. Was this just the market taking a breather, letting off some steam after an incredible run? Or was there something else going on behind the scenes? Let's start digging. Okay, so let's start with our first set of clues. These are the theories, the whispers, coming from inside the crypto community itself. So inside the market, you're basically hearing two main ideas. Theory number one is good old-fashioned manipulation. A huge player, a whale, intentionally crashing the price so they can buy up more Bitcoin on the cheap. Theory number two is a little more predictable. It's the idea that the market was just following historical patterns. I mean, the price had been going up for 7 straight weeks, which is often when you see a correction. Plus, that new record high, it happened on pretty low trading volume, which suggested the whole thing was a bit shaky to begin with. Now, this manipulation theory, it's a juicy one. It suggests this whole drop was anything but random. The idea is that some massive player, or maybe a group of them, deliberately manipulated the exchange order books to kick off a wave of selling, forcing the price down just so they could swoop in and buy up a ton of Bitcoin at a discount. But, as we all know, crypto doesn't exist in a bubble. So, for our next set of clues, we've got to zoom out and look at the powerful economic and political forces swirling around in the wider world, because they could definitely be playing a part here. And a huge piece of this external puzzle is the U.S. Federal Reserve. I mean, they are well and truly stuck between a rock and a hard place. On one side, you've got inflation heating up, which usually means they need to raise interest rates to cool things down. But on the other side, the job market is starting to look a little weak, which usually means they should cut rates to give the economy a boost. All this uncertainty makes investors really nervous about risky assets, and that includes Bitcoin. And if that wasn't enough, the plot thickens. You've got political pressure, with President Trump demanding rate cuts. You've got geopolitical news, like a potential peace deal between Russia and Ukraine, creating ripples through global markets. And then, in the crypto world specifically, the SEC decided to hit the snooze button on 3 major crypto ETFs, pushing any decisions off until October. It's just a lot of uncertainty. All right, now this is where our investigation gets really fascinating, because when you actually dig into the hard data, the clues, well, they seem to point in 2 completely different directions at the exact same time. Okay, so in the bearish corner, the reasons to be worried, you've got that 7-week rally looking a little tired, that new record high happening on low volume, and of course, those SEC delays. But in the bullish corner, the signals for a price recovery look surprisingly strong. You have a positive Coinbase premium, which means U.S. buyers are paying more. You've got strong money flowing into the spot ETFs, tons of demand for stablecoins, which is like cash on the sidelines, and a lot of bullish bets being made in the derivatives market. It's a total contradiction. And this right here, this is the real head scratcher, the Coinbase premium. It basically tells you if U.S. buyers on that exchange are paying more for Bitcoin than folks on global exchanges. And weirdly, even as the price was cratering, this premium stayed positive. That suggests that while the rest of the market was freaking out, some major US buyers saw this as a discount and were quietly buying up more, betting on a rebound. And that leaves every trader on the planet asking the exact same million-dollar question. Is this a golden opportunity to buy the dip before the price takes off again? Or is this just a warning shot, a little taste of a much bigger crash to come? The evidence is pointing both ways. After sifting through all these conflicting clues, some analysts are starting to say, hey, maybe we're all asking the wrong question. They think that to really get what's going on, we need to stop staring at the daily price chart and zoom out to see the bigger picture, the thing that keeps long-term investors so convicted. And that bigger picture really comes down to this one key concept: tokenization. It's a fancy word, but the idea is simple. It's the process of taking a real-world asset, think a piece of art, a building, a share in a private company, and converting the ownership rights into a digital token that lives on a blockchain. So why is this such a big deal? Well, look at it this way. You could tokenize something like Apple stock, but that market is already super efficient and easy for people to access. The real game changer is applying this to private markets. Things like startups, venture capital, commercial real estate. Those markets are famously inefficient, opaque, and pretty much closed off to regular people. And that's the real light bulb moment here. While everyone's obsessing over Bitcoin's price, the truly disruptive revolution might not be about making public stocks a tiny bit more efficient. It's about cracking open this massive, exclusive world of private markets and bringing transparency, liquidity, and access to everyone. So, we want to leave you with this final thought to chew on. Is it possible that the frantic focus on these daily price swings, like the very crash we just investigated, is actually a distraction? Maybe we're all just watching the sideshow, while the main event, this fundamental rewiring of the entire financial system through tokenization, is quietly unfolding in the background. Now that might be the biggest mystery of all.